Okay, let's test how this sounds now with all the music on background and stuff. With all the music on background and stuff.
Fix and remove buzzing sounds and static noise from your microphone.
Okay, what's up? Okay, so uh, let's start going through what what am I looking at today on the markets. So we caught today decent entry on gold here. So you can see what I did here. So in daily chart, let's start from there. So we came into this huge daily imbalance, and then huge down candle from there. Okay, so this is and this is good bearish entry point as well. If you're thinking about sells, because what's here about this high? There is huge amount of buy side liquidity up there. So we are not, like in daily chart, we are not only delivering away from huge daily imbalance, we are also delivering away from a point of interest in terms of like a buy side liquidity. So when you take buy side, where do you want to run? You want to run to sell side liquidity. Okay, where is the next imbalance? It's this. Okay, if you're extremely bullish, you might not need to mitigate this again, because we have tapped into that. Now your general problem with that comes because, like, I mean, it's not a problem, but you know, we are up here, we don't necessarily know if we are going to dump or like maybe consolidate a little bit or violate this gap, I don't know. But when yesterday we dumped like that, look how close we came to that low. This low was very close to being taken out. So then, why did we not take that out? Probably because we are building some sell side liquidity down there, and the market makers are about to run that probably today. And this is the target that I am going for. I'm planning to take my full closure there. 3% trade at there, I would be totally fine with that. So that's the idea here. But this is the main liquidity area that we are targeting towards. So let's just make a little bit more analysis of the price that we had here. So yesterday I made a mistake by saying that we could be bullish. Yeah, we could have been bullish. Because wait a minute, I'm going to refine this a little bit better. That was like, let's make that different color. 20%, 20%, Save as default. There you go. So, what was the problem? I was looking at longs here. I'm learning all the time, and this is one of the things that I shouldn't have done. So, looking at this hourly fair value gap, this is major area. Like, we were trading to the downside. I cannot expect market to push higher from here, especially if we do not inverse that hourly. That hourly gap is way too bearish at that point if you have not broken that and inversed it. And even if you inversed it, that doesn't mean that we're going long. So yeah, the problem that was that I was basically marrying my long bias, and then I kind of luckily I didn't take anything, but I could have taken this if I was a little bit more like reckless with my trading. I could have taken this and lost immediately. But I do know why we are shorting, because we're delivering off of the daily fair value gap, swept buy side. We're trading to the downside. The price action to the upside is very choppy. Okay, there's one clean price like what, but that doesn't really mean anything because the hourly chart is still respecting this fair value gap. We swept some buy side here. So if you wanted to take something, in hindsight, now this is not my entry model, and I wouldn't have probably taken this, but you could have had this as your buy side, like inducement liquidity to go long, short, and maybe have your stop above there because there's a small gap here as well. And then, yeah, it's kind of wide stop, but what do you know? Like it's okay to have wide stop when you're able to catch huge move like that. So yeah, the reason I'm in a sell because bias is short. Asia consolidated to the upside. We broke structure to the downside in daily. For hourly chart. Okay. Then this inverses. Is that bullish confluence? No, it's not. Because there is fair value gap higher in the leg. So, and you can see how precise that was. We tapped into that, and that's exactly where I got in. That's amazing entry. Yeah, inside 1 minute candle we tapped myself in and went down, and ever since I have had zero drawdown here. So yeah, you could manage your risk up down here. Because the entry is so precise, I really don't want price to come up here anymore. So I'm going break even with this. I'm not taking profits out yet because it's my funding pips account. I entered with like a 1% risk. At that low it would be 1.5 R. So I don't know. I'm still holding. We are around 0.8% up right now. So we keep holding on that, but because we are break even with this, we can't lose anymore. So I'm allowing myself to get into setup if we can identify something on Euro USD maybe. AU maybe, I don't know. Let's see what we get. Flipping bearish in every single pair. But yeah. Let's hope that we can catch some pips today. So if you watched my latest video, I've been starting to implement this IFVG strategy on NAS 100, and so we are. So I made a Pepperstone account where I deposited 25 euros, meaning that I'm just going to practice that IFVG strategy with that. So that's what we're gonna do. I don't think NAS is gonna move right now, so we're coming back to NAS later. Let's see if we can catch something. There is no other red folder news but Powell talking. So yeah, Fed Chair Powell testifies. There we go. So that's the only red folder news event here. That's 10 a.m. in New York time. So let's just see what we can catch today. I'm pretty satisfied with that gold trade as of now. We could even drag our stop loss a little bit on profit. Let's see. Let's just have like our stop around there. So I managed to trade on my phone. In C Trader. Pretty good stuff. So this is a reaction you don't really want to see, but you know what I'm saying. We got that M15 fair value gap. Like I could allow it to tap into that and go down. But realistically, if you have your stop at that high, go for that low. That's 2.29R. You could have like even full closure there. That's totally fine to close the trade. Now I was going for the bigger swing here, so let's just see what we can catch here. Okay, looking at this, it's a pretty good like a trade idea to go with. So if you haven't taken a trade here, you can see that there's like a fair value gap there. So if you are willing to take the risk, I think this could be a good point to get your entry or scale in a little bit like a with a bigger position, I would say. So I cannot guarantee anything, but I think if you are sure that price is going lower, then I would say this fair value gap is the best entry point for you to go lower. So right now I'm expecting price to visit this and have a bearish rejection from. Okay. Let's see what we are having here. So this gold trade that we took stops at break even a little bit on profit. Things are looking good. That M15 gap didn't end up being mitigated. I mean, we could theoretically push it up, and this would be much more bearish for me if we had had a slight tap into that and then rejected from there, because now I'm still thinking that okay, price might not care about this, but I could still kind of in some scenario like want to push up because of that gap. So but I entered off of this and into this in hourly time frame. It's totally cool to just monitor this off of hourly time frame, and based on that there is no gap yet. So let's see what we get here. So rejected at London low. Now this is giving me very bearish bias now. New York session is opening here, and this is the time when you could start seeing some type of manipulation. So I wouldn't count out the possibility that we, I don't know, leave equal lows here, run that high, and then maybe dump. Or if price wants to give you some crap action, then it could, I don't know, hit me out, break even there. But I just have to trust my analysis here and not touch this because it's moving nicely. I can't really see any other direction for it to go. So let's take a look at EU and these pairs. For EU, if you are bearish, you could simply just pull your fib. Look at where is the equilibrium price point. Lines up with that fair value gap, you could enter there. Take the entry from an equilibrium target, I don't know, these lows. Now, often when you are bullish and price gives you this kind of signature where okay, London takes out Asia lows there, fails to displace to Asia highs, doesn't even tap them, follows bearish structure. Okay, what do we have here? Buy side liquidity all over the place. So in bearish, like if drawn liquidity is down, in that kind of case, market could just tap that equilibrium and just run lower. That's totally fine. Market can do that, and we don't need to target any specific liquidity pool up here. But if market is bullish, New York session would often give you kind of break of structure to the upside, from which you can then long to take out these highs. Now this is a little bit tricky for me because I'm not sure where we're going with this. We got that huge gap in movement there. But if you look at like daily, there is really no fair value gaps here. There is a big one here, but it's quite far away, and so I guess we could push through all of this structure, but I don't know if we are going to. We have swept this sell side already, so could this mean that we are willing to now push higher? Because this is not only this low. This low came super close, so this is almost like an equal lows with that, relative equal lows. So I guess this is a situation where if we can identify the direction of the market clearly, we can go into sells from here, or buys after a 5-minute break of structure to the upside. So as of now, we cannot take anything there. Then LU is looking bullish for me. I mean, at least it was looking bullish. Like if we took that liquidity and then started running to the upside, that would be the ideal situation. But I think at this point we have pushed a little bit too far to my liking down here. So at this point, I'm not really like sure, because how I was reading this market during London here is that Asia reacts away from fair value gap, respects that, takes out sell side there. Takes out sell side. That's pretty cool. Runs. Creates some sell side here, equal highs here. So after you sweep that sell side, it kind of made sense that we could long. Obviously, this London session, I'm not expecting London to do anything great. Now, this is theoretically still a position where you could long. But I'm thinking that we are a little bit uncomfortably low when looking at this price leg from this down low to this high. So we're a little bit like too low to my liking. And I'm thinking like maybe we will push that low. And when you look at this consolidation, we are building a lot of buy side. I'm thinking we will long. We even created equal highs with Asia and London there. So I don't know, maybe we will like push lower. And when Powell speaks, we will like sweep all of this shit. Or maybe tomorrow. But definitely I'm willing to take longs on AU if you give like a market structure shift. Because right now it's not looking so good. I'm definitely not going short because I don't have clear target. There's too much buy side. Even like higher time frame, I'm thinking we will push there. Market is not giving me enough confluences to go short. These candles, and especially how this is printing, I'm definitely thinking that there's higher likelihood now to sweep that low. But that edge low, but that is problematic because you know what I'm saying. The structure is kind of choppy here. Where do you see a fair value gap in 4 hour? You don't see any. Hourly fair value gaps such as this one is still being respected every time we tap into that. Price moves and rejects from that. So let's see. So these are really like looking at the hourly gaps, the only ones that are being respected bullishly. You cannot see our 4-hour chart has no bullish gaps or bearish, nor does daily. There is like big here, but at this point in price, I just cannot expect market to push down there. There's too much resistance in this area. Too much liquidity being built by side. So I'm simply going to wait, and if market gives me nice breaker structure to the upside, I'm willing to go long. Otherwise, I might have to stay out for AUD. Then what is the GBP USD? Oh, signature here. So general thing happens where you take Asia low, go for the Asia high after the breaker structure. Obviously the problem is that, okay, I was looking longs there. I'm not trading inversions, but if I was, I could have taken something here. But yeah, no break of structure, nothing too clean for me to take. I missed it, but it did the thing that I was expecting. So your usual run of the Asian lows, break of structure, run of the Asian highs. After this pattern, market usually continues to the upside. Now we have broken to the downside, so broken to the downside, break of structure there. So what does this tell me? We're delivering away from this hourly gap. As bad as it 4-hour gap, sorry. Let's just put that. So the 4-hour chart doesn't look too clean, generally speaking. So I would say it's looking bearish, though. We've swept a lot of buy side there, and then when you broke structure to the downside, it's hard for me to believe that it's run Asia highs and Asia lows once. It runs for the low, runs for the high, runs again for the low, new low. It would be kind of odd to see market running back to the high again. So as far as I'm concerned, there is liquidity being down there, and you can even see like these equal lows. Sell side, that's your break structure. Let's put it there so it's easier to see. So what I would say here is that G is looking bearish. Your ideal situation, maybe tap into that fair value gap, stop out there. You can go for the shorts. I don't know if it's able to go all the way down to that data week. I would monitor price at the equilibrium of that data week, especially. Now, what I have noticed with my backtestings is when you're kind of entering from this M15 structure, when New York opens, if it's like super bearish, it could like make a small movement and then dump, and so it doesn't really offer you the entry that you want, and sometimes you kind of end up chasing price or doing something like that. And so as of now, I haven't really found a way of not missing entries, so sometimes it will just leave without you. Maybe you can take like a small position from that first fair value gap there, but I just don't feel comfortable doing that. So we'll just have to wait. And I don't even like this M5 structure up here. Like M15 suggests that it's okay to put your stop down here, but looking at M5, there's fair value gap up here. I don't know. If we push all the way up here, we will not have enough volume to go up down again, meaning that the majority of New York volume will either happen tapping and go down, or then it just goes up for the day. Maybe takes out this high, maybe not, but the scenario could be it just runs that, or maybe like pushes up here, maybe mitigates that one, then kind of starts consolidating, maybe moving downside, maybe a little bit upside, and then Asia could do whatever shit it wants. So I'm just trying to catch like intraday move in New York session, so I think this is fairly good stop loss. Okay, let's go to EU. I want to see what's going on with that. Okay, so EU was that thing. So we got a huge SMT with EU and GU there. I didn't like the fact that EU ran these lows and has buy side, whereas GU didn't run those lows, or did it? No, it's that low, 930 low, 915 low. So that's GU. Is that the 915 or is it this here? No, that's midnight low. Okay. So that's the new week low. So we GU actually took those lows, but I created very equal lows with that shit. Whereas EU is much further away. But anyhow, my kind of bias stance with this. So GU is looking much nicer because it swept all those highs and then went, whereas EU failed to sweep, generated buy side. Now, if we were strongly bullish, I would only be waiting for the break of structure. But because we are not strongly bullish, I would rather see GU to mitigate up here. Now you can see what I mean. Sometimes New York just opens and it kind of just leaves here. And it's so annoying because I want to get the better entry up here. Because I cannot take an entry down here and then have my stop up here. That's just outrageous. I cannot, in that kind of case, I couldn't target but like 1-to-1 R. So GU is looking pretty okay. I love this reaction during New York. So you can see how M15 candle goes past this low wicks heavily. This could have been the reversal point if it wanted to. But it's now pushing back down, so this is very bearish confluence for me. It seems to me that this is pretty nice profit for my funded account. We are $65 up for the $5,000 account, so that's like 1.2% profit there. I'm targeting like 2% profit for the trade. Now I shouldn't get greedy here, but if you look at the price leg, there is really like this bullish fair value gap. If the 4-hour candle closes like this, it's getting inversed. Four-hour inversion. So that's just what I'm waiting for. If we get that 4-hour inversion, I'm willing to hold long and not take partials, because if you look at this price range, that is really the only FVG here. There's no hourly one. There is in the same area one hourly, but it's kind of the same with the 4-hour. Small sum of this doesn't really matter for me. Pretty efficient price action here. So if we are continuing lower, flipping all these bullish gaps, because that is really the last one, then I don't really see what's like stopping us from running lower there. So let's just hope that price stalls / moves lower in this this kind of price range. I don't want it to push too up here because the 4 hours closing in 17 minutes. It kind of seems that we're far away from this gap. We are trading past it, but 17 minutes, like, it's one bullish 15-minute candle and we are inside of this gap again, so you don't really know. You do not really know. Let's hope that this rejects goes to the upside, gives me like a possibility to go short. I'm definitely taking that if that gives me setup. Okay, we're not pushing a low or higher here into our area, which I single-handedly do not like, because we are missing our trade here. Like if we were pushing similar candle to the upside with the same size from, let's say, this open, we would be in our trade right now. What can you do? As of now, I only can have my entry at the point where I'm planning to have it and have my drawn liquidity. If market doesn't want to give me the entry, then I just do not have a way of taking this trade. Maybe if you give like a break of structure down here, you could have like a chase entry type of trade from fair value gap that's being created here. And yeah, like extreme scenario, market could give you something, could give you a trade, and it could still run there. But who is saying that it cannot liquidate that high once more before going? And that's the problem, because you cannot identify whether or not it's going to liquidate that high, because we are in a discount. We are in a discounted price zone, because this high, this low to this high, or the correct way of drawing it is from the high to low. You're in a discounted price like there. So yeah, you are here. We are here in a discounted price like so. This is the equilibrium. Up here is the premium where you want to sell. Down here is the discount where you want to buy. And it's simply an ICT concept. We do not want to sell here, even though we would see a break of structure, because we don't know if that's going to go be valid. We got liquidity up here, we got fair value gaps unmitigated. It could run there once more, because this is the high time frame narrative, and price like that should hold the price. This is the high that should hold the price if we are going short. So we are still staying in this gold one. Nothing gonna happen to that. I might scale something off at this low, and maybe after, I don't actually know. Maybe after FOMC, or even we could even try to take a look at it now. And as 100, we could try to take some inversions. So let's take a look at that pretty soon. But yeah, we got in like hour 20 minutes we got some, or hour 10 minutes we got the Jerome Powell news. So let's see what we can have there. The 0 and 1 minute chart in Euro USD looks very unclean. What's up with like Pepperstone? Yeah, it's not clean at all. Does it always look that choppy? Like I've been using Forex, Forex.com. So this is like, this looks cleaner. I don't know. These candles are looking a bit odd, and the price kind of gaps a lot there. But anyhow, you can see if we violate this high and give like short-term bullish trend, that would be beneficial for us. But I cannot say where price is moving as of now. I only can say that it's probably gonna have some rejection up here, and that's why I'm taking a sell from there. But this is why I like my strategy, but at the same time I kind of dislike it, because it's like something crazy, like probably like 50% or 40% of the time price is just leaving me without the entry. Like maybe it taps that high out and then just drops. I don't know if I have something wrong with the analysis, because the draw liquidity is correct quite often, but then it just kind of leaves me. And so that's why I'm kind of interested in taking and starting to utilize the higher frequency, like lower time frame strategy in terms of trading IFVGs. For example, here you got pretty huge drop. You got IFVG, stop at that low. Target maybe 1 to 1 are in that range, and you are hitting a winner there. And I got that. I got that. Pepperstone account, meaning, let's see, are we with this? Oh, I can't take that because that's a one chart. That is Pepperstone chart. And so this is pretty nice signature and price that we could have utilized. So this is basically the strategy. You kind of like look at the liquidity, where market is moving. You obviously can't take set up against your bias, but and I don't know, have your stop around there. Go for 1 to 1 R. Why I would go 1 to 1 R in this scenario, because we are probably going to liquidate that high because of that inversion. But then we don't know if we are going to respect or disrespect this fair value, for example. And we are bearish in the latest moves. Plus, we got that low. We came super close, failed to take that out. So now this is like a almost like equal low sell side liquidity. There you go. So now, how the structure works: low, high, lower low, lower high, lower low, lower high, lower low, lower high. And you could have taken that lower low, lower high, lower low, but when you get a little bit more advanced, you can realize that this is like a small pullback And to be fair, so is this. And it would have been totally fine for us to liquidate that low and then move. So this is not a breaker structure necessarily. We need to see how price reacts in these bearish fair value gaps. And why I don't like this as a breaker structure is because, first of all, no fair value gaps. A small fair value gap down there. I want to see much more cleaner displacement. Also, we came super close to that low. We didn't take that out. We didn't liquidate that. Now, if there is like an SMT there, which there probably is, that could mean that it's fine to have that not being swept. So that's S&P 500. So that's actually the low, which you can actually read from here. Sorry, you can read the low from here. So from that red line I marked out, there's the low. So the low says 7.4. 7.4. So these are equal lows on point. So this is not SMT. It could be like SMT in futures or stuff like that, but you have to take a note. So futures. Now this is substantially great to look at because futures took that low. ES, I don't know if ES took that low. ES actually didn't. So this is bullish SMT. So the forex brokers and CFD providers kind of have sometimes different pricing, but even though these are like equal lows, and I said I don't want to long against this, I guess it's fine because Nasdaq in futures took that low. There's bullish SMT with ES in futures side, so I don't really mind this anymore. This doesn't really mean anything to me anymore, because 100% of the time Nasdaq is moving in futures same direction with Nas 100. They are like the same asset, just in a different asset class. And if you purely trade like these indices, you should move to future side. But yeah, for example, this is like flipping this M15 gap right now. For me, it's looking pretty bullish concerning the fact that the NQ took the low that I'm looking at. Obviously, I do have a problem with the futures because I cannot catch the SMTs and price differences immediately because I don't have pro subscription on TradingView, and the futures data is delayed, of course. But it doesn't really matter. We can easily trade the IFVG model with NAS 100. It's not that nice. It's not so clean. What do you have? But I guess it works still. It still works. Geo is kind of stalling in that area, printing you a bullish candle, but it's kind of respecting this, or is it? Oh yeah, it did disrespect that. I don't really know what that means, because you got like that one disrespected, and now we're bouncing away from that. So let's just allow price to do anything, like, and put like alert there. And we need to stay also careful with this because okay, well, let's see what happens here. The 4-hour candle is about to inverse that gap, but we're actually having pretty bullish reaction, and we're super close to that gap, so we might actually close respecting. It's 1 minute 40 seconds to go. We're super close. We are pulling back up. we might close respecting, which is not nice. Well, we have to be willing to give our profits back to the markets, because as far as I'm concerned, we are flipped every bullish gap in like hourly. My analysis still kind of stands, and I don't really know where else we would go. I'm willing to give my profits back if market wants to slap me on the face here. So let's just hope that we can't really do anything but hope that that gap inverses. This is what I meant by annotating this M15, because now you can see that we haven't, because I hoped that this would tap that, because now we haven't tapped that and we are building just like low resistance liquidity run, and now we could run up there. So this is annoying, but we're pulling back up with like heavy candle, and that 4 hour ended up respecting though. So this is a bit more bullish. Okay, GU runs up there. I didn't expect it to be so quick. I might not be able to catch the trade. Fucking hell. Okay, I'm sure we will catch that. You know, if that GU doesn't end up coming back up, I'm hopefully pissed. So EU is about to liquidate that high. The XY just looks it's gone, but push to that high, and we have pretty bullish range there. So okay, I took a market sell there. So this is our entry. It's decent. Because I failed to have the limit order at that gap. That would have been exactly perfect entry point. Now, I don't really... Okay, we traded a little bit past that. But it was decent idea to take the... market execution there. Okay, so I'm not so sure if we are actually going to push immediately lower, because yeah, this nice and precise entry, but that's... we're generating buy side here. That sweep is not what you want to see if you're looking to take out buy side. So you want to see like a little bit bigger wick like that. But it's okay if we just run lower. That's what we're looking at the end of the day. So we are with 2 trades, but basically only one of them is open risk. The other one I'm out. In terms of risk, we are break even. And with GU I'm targeting, well, ideally consequent crosswind of that wick there. I will go break even slash, I don't know, let's just put like, we're going to have like risk management slash partials at that low. So let's keep that in mind. I'm not so sure if this is a good idea to be in this trade because Powell's peaking in 1 hour. But let's just hope that we can see like a drop. And if you would be able to trade in this area when Powell starts peaking, then I can make the decision of closing the trade or moving break even, taking partials, whatever. But as of now the reaction is, I can't really say much. We are pushing lower, which is positive, but as of now the general, okay, the candle is printing pretty nice, I'm not gonna lie. But I'm also not going to say much. This 5-minute candle is looking pretty nice right now. Let's just hope that the last 5 seconds doesn't make any crazy moves. Okay, flipped bullish, which again I do not like, but it's still like a doji, so it's at least going to push out that low. Doesn't really mean anything for us though. The worst case scenario would be like we push into this area, then start consolidating, and then somewhere here Powell starts peaking and we just simply cannot hold. Because if Powell starts peaking, we are drawdown and it wicks us to another dimension. That will be bad, man. Like I've had some slippage in funding pips. I was like on profits with gold. I had like break-even stops and it slipped me out probably somewhere here. So that was something I didn't wanna, I never wanna go through again. Obviously that wasn't like small, that was like still a small loss. But I'm probably not willing to go with the news trading again. Okay, so gold is knocking us out. That motherfucker just moves like that, so what can I say? The analysis was decent until this point. Maybe I got greedy, I don't know, but we are breaking with this position anyway, so it's W risk management anyway because we didn't lose anything, but maybe should have paid myself at that low. We were a little bit too wiki with that whole shit. I mean, gold moves a little bit weird sometimes. Who's saying that? Like, we're still respecting these gaps. I don't know. Let it play out. I don't really mind no more. I hope that the GU isn't the loser because otherwise I'm breaking even with that funding pips account, and I do think this is decently good trade. I don't really see what would be wrong with this other than the Powell speaking shit. We are pretty bearish even in higher time frames. Like, obviously we're creating these equal highs, but there is like a daily fair value gap, and you created like, actually let's do this shit. So I'm going to remove all that garbage from month, week, days. There you go. So why I'm pretty sure this will play out, at least in this low, to this low, because that is the fair value gap in daily. That is clean target. I like to play those targets. I've backtested this multiple years, where in this kind of scenario where you have bullish day, then the next day candle is like this. It creates fair value gap with that, and but the most notable thing is that this candle fails to close above previous day's high. What does that mean? It means that like around 70% of the time, the next day's candle is going to sweep the low of this candle. And that's just my general understanding from my backtestings. And this is especially good setup because that fair value gap is there. Even if there was no fair value gap, we would still be expecting maybe possibly that low to be swept. We came very close, we created equal lows, so now there's like a bunch of confluences to go short. This is your M15 fair value gap. We're rejecting the consequent encroachment of that right now. We only just tapped into that. This play is pretty much aligning with all the concepts that I'm familiar with. So I cannot say anything else, but this is a good trade in my opinion, and I'm not breaking any rules. Maybe I don't have any clear rules concerning the news trading other than that I cannot trade the news events. So what that would mean is that if we are like, especially if we are somewhere in drawdown and news come out in minute, I have to close it. I cannot hold it. That's gambling. Maybe if you are up here and you are fine with your current profits, you have stopped at break even, maybe you could gamble it a little bit. That wouldn't be per se breaking your rules. But I do think that this structure is very nice because we swept liquidity once, swept liquidity twice. Then I see this as the breaker structure because it just seems like it's a pattern that should work out. Obviously market doesn't own us anything, so it could still end up not working. What can I say? Like, the only reason why I don't like this is what EU is doing. But I don't know. Not like, it's not even always that EU and GU are moving to the same direction. Like, I have seen days when maybe GU absolutely dumps and EU kind of, I don't know, moves a little bit to the downside and kind of consolidates, or maybe even consolidates to the upside like this. I haven't seen too much days when like EU, let's say EU dumps and GU pushes upside, but they don't have to be like 100% aligned with each other. And you can see what happened here. This was the initial entry. Market executed at somewhere there because I failed to execute at that fair value gap. We could have got new entry there, but it's twice that market has come to this area and failed to do anything else than go like even that. Like, it's 0.1 pips. That's like the smallest move in price that there is able to happen. But this M15 candle is pushing bearish. This is looking good now, but I don't know. Gold has probably Listen, man, I don't like this goal shit, man. This is the movie so weird. I might just close this shit. It's come up here. It's almost like generated more buy side. It's playing with my feelings. I don't really know what to do with that shit. But it's not like violating any specific bearish PD array that I should if he's going long. It's not like my analysis is invalid, but I just think that the thing that we're doing here is that the thing that goal is doing here, it's just not really something I want to see, and it's probably gonna push higher from there, so I'm just close it. Okay, we're closed. I'm closed with the gold shit. I don't watching that shit no more. I don't want to have 2 trades open when Powell starts picking like maximum 1, and that's even that I will probably close if we move well enough prior to that. So that one ends up being 1-to-1 R. So how I'm going to mark these out is Geo ain't really moving right now. We have that bullish gap. We should ideally reject. So inverse that. But now that we're rejecting away, I think we will liquidate that high, and then do something. Give me a little bit of drawdown or some shit. I don't know. That's probably gonna happen here. I don't want to see this shit. I want to see like energetic candles to the downside. EU is moving to the upside, but it's still trading inside of a range. Like, if EU is going to go sell off, it should realistically happen around now, because looking at this, order block there, fair value gap there, bearish range. We are in premium pricing from that range, also very premium in that range. So, and if EU is going to go short, Geo should do that as well. Well, yeah, we're coming a little bit back up. Let's just make sure that my entry price is same here with my broker. So the entry price 28,075. So that's a little bit lower because of like spreads and stuff like that. But yeah, respecting this bullish gap, M1 does not look too bearish right now, and this is why I think that we are going to liquidate this high, because of these gaps being respected. I just hope that we can see like a previous structure to the downside, but you know why I just wanted to enter straight off of that M15 gap without seeing any price action or confirmation is because I think that with my understanding of liquidity, we should be rejecting from here whether we are entering off of a M1 breakout structure or not. Now the M1 breakout structure might give you a little bit more confidence, but if you want to have your stop up here, it could mean that you are getting a little bit worse risk reward, and I just don't like that. Now this candle is pretty nice, we inverse that, so but I don't know, M1 doesn't really mean anything in this higher time frame M15 context. But yeah, if we are able to flip that M5 gap, my confidence levels will be pretty high, and we will be able to move stops to break even with this. But as of now, we are in having this open risk position still, because we don't know, there is still like large gap here. Obviously your problem is now that in 30 minutes you got the Powell shit, so I might just have to move my stop up here and down here, like trail it, be aggressive with the closure, because like if market moves like next 10 minutes to drawdown, I just do not know where it's going to move next then. So we might just have to be pretty aggressive, and if it seems like it's starting to push to drawdown, we just have to close it, because I don't want to take loss only because Powell starts speaking and I cannot hold the trade, so I'd rather just go break even out. So let's try to manage this shit. I don't even know what Powell is about to say. It's just like Forex Factory Powell testifies. I have no clue what that means. Semi-annual monetary policy report before the Senate Banking Committee. I don't know what that means. Some weird policy shit. So EU is printing bearish candle. Now I would have taken EU if it had like wick taken out that high. And how that would have gone is I would have executed from this M5 fair value gap, having my stop at there, or maybe up that high, targeting this low and the huge gap in price here. Okay, I don't like what that Geo is doing because Powell's about to fuck me up with this shit. You can see why I did close that. That's still like 1-to-1 art. That's not a bad trade, man. We gave like a little bit too much profits away, which I'm very annoyed about. But what can I do? Powell is probably going to rush these highs, mitigate that extremity gap, and maybe run lower here, which means that if you're absolutely sure that it will happen, you could have like a limit entry there, and then hope that the red folder news tags you in to take short. But that's not something I'm interested to do. So look at this. EU is absolutely rejecting. Obviously it hasn't broken any structure even in M1, so this rejection doesn't necessarily mean anything. But we are not seeing that same rejection in GU, which I don't like, because I'm saying this again and again, but the motherfucking Powell will speak in 33 minutes. And this is the reason why I could be willing to just take the break even and close the trade now. Because it doesn't seem like it's like Geo will give me any type of profits before Powell speaks, and now we are just accelerating to the upside, and we could be stuck in drawdown once he starts. The only reason why I feel like this is fine, because this is the equilibrium of the range. You got that M5 fair value gap, so if it wants to step into that, it could be fine. But we just want to see a rejection away now. If M1 doesn't start to print like bear candles now, I might be forced to get out because of the news. That was the equal lows with the NAS, and it's like Pepperstone NAS didn't take out that NAS in Owenda did take that out. I feel like Owenda is more like accurate in terms of price, but I just have to take the Pepperstone one because Pepperstone is my broker. So we got half an hour to go, so we just allow it to print whatever it wants to print. Let's see. We are still having like a lot of room to go to our stop loss, and this is like based on M15 time frame. It can take like fairly while to play out, and it's definitely not going to play out before the news. So that EU1 ended up coming back up. Cannot really say much about that one. It was expected because GU is moving so far right now. It's like when we're talking about bearish price action, GU kind of stalls, and then every once in a while it just prints this huge bull candle. No, it's not invalidating anything. I'm not getting any bad vibes from it. It's just kind of playing with us. I would rather it to reject, because sometimes if New York sessions doesn't give you the rejection here, we could be fucked. It was a good idea to get out of the gold shit. It was moving to our direction until it wasn't. So it is what it is. We were able to secure that 1-to-1 R. And even like this shit, like it would be fine to hold this, but it's giving me the worst case scenario right now, where the Powell is starting to speak and we are continuing to push into drawdown. And I'm not into this in this trade, so Okay, we see a pullback here. I might have to take like super small loss or some shit, because we're getting the power in 20 minutes. And whatever happens, I simply cannot hold over that shit, so I don't really know. The M15 pushed into this gap, like it's not looking good. We're pushing it again into that. If he like wicked and left down, yeah, it would be fine too. But like EU, look at that liquidity. That's just clean, man. Obviously, I can't take that because even if it's looking like clean, it's not my model. I'm not sure about the draw on liquidity. Like, of course, it's probably gonna stab that out, but I don't know, man. Not my model. I shouldn't get too excited about something. Like, if I see that market is going to take that out, I shouldn't just get into buys like from here, because I have. That's not my model again. Like, it's like now that I'm saying this, it's probably going to drop down here and take and clean all those highs, and after that maybe take out that fair value gap and then continue higher from here, or absolutely going to dump. That M15 is fucking destroying me. Powell is going to blow my account here probably. Let's see how much this funding pips account cost. Because I might have to buy a new one, I'm not gonna lie. So the 5k account is still only 36. So that's 33 euros. That's super cheap. I don't know what. Oh, there you go. Choose that. Trading view. You can even change the trading view. That's cool. I mean, I kind of like the C trader, but the trading view is kind of similar with the C trader. At least with the fact that you can calculate the lot sizes internally. Okay, this is going to demolish us, man. That closure is super bullish, man. That's gonna fuck us. What is it moving so high up? I don't understand. Like the analysis should have been decent. Like I don't understand why this is doing this. Like we rejected away from that 4 hour hourly. That got unmitigated, but I don't know about that. Do you need to mitigate every single area? I mean, price is bullish. Maybe I should have just looked for. I mean, I wanted to take longs after it kind of sweat more liquidity, but I didn't do that. So maybe that should have been like no trading. Okay, this is what we're gonna do. If it becomes 16.59 and wherever the price is, I will close the trade. So I will allow it to hit my stop loss if it wants to before the news. And you know, if this sweeps me out on news push all the way down here, I'm going to break my PC. So let's just do that. AU hasn't taken the Asian laws. So I'm thinking this is pulling higher because that got inversed. I don't know if we are able to get into this. I mean, we wouldn't be. I mean, we would be able to get into this, but the Powell shit is too mad. That one got 1 hour profit. You know, my problem is that we're printing these good candles to the upside, and downside we are not seeing nothing, man. Two like shitty motherfuckers there. I might be still willing to get into gold if that liquidates that high. Let's see what news give you. Okay, I could, because news could weekly high here, and I could be able to get into entry, sell these lows. That's still my bias. Fuck this shit, man. We are like 5 minutes to Powell news. Let's see if we can like pull a little bit lower and we could secure some of those. Some of that shit. this shit, man. We didn't even tap the consequent encroachment of that week, which I don't know if it's a good thing or bad thing. I think we're manipulating a little bit lower, and I don't know. Powell starts talking, and we will absolutely demolish one of the direction, man. You can see why I'm a break-even trader. Like I take obviously it would be normal for a profitable trader to take these kind of losses still. I just don't know. I'm not sure what went wrong here. Maybe the kind of EU wasn't lining up with GU too well. EU was looking a little bit more bullish. GU was intraday looking bearish in my opinion, but the high time frame was a little bit more neutral. Cause like, yeah, you could push to these lows, but it's like pushing higher and taking a lot of sell side there. But I don't know, man. This was a bit like hard day. We're pulling now lower, but we need to kind of close here. So that's what we're gonna do. We're out of the position at that gap. I mean, we're still 1% up for the that's around 1%. So if the gold win was to our win, we would be 1 hour up right now, but 50% win rate, there you go. I will be pissed if that pulls now all the way down here. Right now what I'm looking at, I don't know, needs to push price into this high. You could have your stop up here, target that low, but I'm just not going to get into that. We'll be losing too many. Likely. And I'm trying to execute this inversion sheet after Powell. So Powell is picking now. You can see the volume starts pushing price higher, so that was decent close. That order block that I kind of marked out got tapped. Obviously, I'm not interested in that shit because okay, we're done for the day. It was a rough one. I won't be able to live stream tomorrow, but I will be updating you with my trading still.